Today is Friday, ladies and gentlemen, the last Friday of the month. What a spectacular month that we have. I mean, it was full. It was full of different stuff and political, economical, yeah, it was all over the place. Look, about all this and a little bit more, we'll talk about right now in the webinar. So stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, today is Friday, the 27th of June, 2025. So this is the last trading day, or should I say, the last trading Friday in the month. We still have one day of trading left in June. That's going to be Monday, but in a way, like the full week, we're finishing today. Look, ladies and gentlemen, I hope you all had a wonderful week. I hope everybody's feeling, well, I wouldn't say nice and refreshed, but well, at least you're kind of ready for the weekend, right? Look, but we still have to go through Friday, and we do have a few important events, given the current circumstances, and I'll talk about that. I'll elaborate on that a little bit more in a bit. Look, before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I will do my usual good morning in the chat room. Good morning, everyone. Good morning, everyone, ladies and gentlemen. Yes, there we go. And look, I hope, like I said, I hope you can participate in this session. I mean, if you're watching this live, please feel free to ask questions. If you're watching this as a recorded session, I already mentioned this before, so you can always drop your comments in the box below. Yep, I'll pick up on that comment during my next session. So, also, just before we jump into the charts, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, indices, Nikkei 225. There we go. Blast to the upside, and so far, so good. I'm very happy about this because my scenarios have worked out, and honestly, look, before I talked a lot about this, and I said to you that I'm leaning towards the upside, especially if we clear that 38,771 territory. There we go, boom, fantastic movement. Then I said to you, look, I'm going to be very careful, and I'm going to aim for this downside line taken from the highest point of July of 2024. By the way, I'm looking at the cash index right now, so yes, the market's closed already, so but anyway, look what a beautiful move we had. We had a break of this downside line, and then I said to you that if we do break that downside line, my next target is this 40,000, kind of this one around here, 40,280 zone ish. There we go. Bing, bingo. I would just want to say boom. Actually, boom. There we go. We have managed to hit that, and it was a great success here. Look, I have the 40,620 zone as well here on the top, here a little bit higher, which is also a good area of resistance. But first, let's keep an eye on this area, and let's see what's going to happen next. For now, like I said, mission accomplished, and you know what? I'm chilling. I'm just enjoying this one right now, and I'm just going to leave it as it is. And there we go. Look, in terms of economic data in general, Japan kind of delivered its retail sales figures, which I don't know why they're not showing up. Let me just refresh the chart. Maybe because maybe it wasn't refreshed properly. There we go. Exactly. There we go. Retail sales. I don't know. It's a disappointment. 2.2 against 3.5 previous. Well, unemployment 2.5. Okay, that's still, job market is still okay. Tokyo's core Tokyo CPI year on year. 3.1, a decline. The Tokyo Core CPI, 3.1, again, a decline from the previous. Job applications ratio, 1.24. So, look, what can I say? For now, everything is kind of mixed a little bit. So in a way, I would say, so retail sales, not very good. No. Unemployment, good. Tokyo Core and headline CPIs, it depends on how you look at it. You know, if we're looking for a rate hike, then of course, no, not good. But if we're looking for a rate cut, I mean, or actually, you know what? To be honest, let's say that BOJ is not looking for a rate cut right now. On the contrary, they're only looking at a possibility for a hike. And yep, this is what some of their bank officials are advocating for right now. Because look, in general, yes, a lower CPI number, Tokyo CPI number, that's great, but still it's kind of further away from that 2% target that the BOJ has. Anyway, look, for now, I'll say it this way. For now, the index here is mainly reacting to I think the global situation, what's happening with the U.S. indices as well. And I think that that's going to stay for now, unless you get like some sort of really crazy data from Japan, and that disappoints heavily, and then we could see, you know, a nice reversal. But in general, I would say the data here is not that bad. Yes, retail sales maybe lower a little bit, but maybe they can justify it by seasonality or some sort. You know, maybe it's just, you know, it's normal. It's still okay. It's still 2.2 is still nice. You know, still not, you know, still better than March, for example. But look, they're still holding on. Oh, it's like kind of an average, you know, roughly an average between the lowest point of this year and the highest point of this year as well. So yeah, that's why maybe the market is seeing the lower retail sales number not as a big issue. It's still kind of somewhere there on the average. Let's jump into China very quickly, ladies and gentlemen. China, looking at the index here, look, beautiful technical setup here. I'm loving this because why? Because we are having a nice rejection here from this 13,800 zone, and there we go. We're drifting lower. Look, from what we're hearing today, it seems like that China and the U.S. managed to reach some sort of an agreement. From what I understand, it's a little bit on the vague side. Nobody kind of knows much and doesn't hear much. But there are a few, like I said, there are headlines coming out saying that, you know, China and the U.S. have managed to reach a deal. So let me just kind of read through this. So President Trump announced Thursday that the United States and China have formally signed a trade agreement bringing an end to months of negotiations. The deal cements the informal understanding reached earlier during talks in Geneva, marking a significant step in. Right. So basically, you know what's interesting? So when we were not getting a deal, we were not really getting like this, you know, agreement and everything. It was a big thing. It was like just, I don't know, like it was just going crazy. But now what my problem is that they signed a deal. Well, it should have been like a big thing. It should have like received a lot of coverage. However, now the focus kind of is falling on Europe, you know, like, oh my God, like now it's like the Europe is the problem. But the thing is, I mean, like you reached the deal, you reached it, China, US reached the deal. So why, like, it's not really, like I said, it's not really, it seems like the news outlets are not really emphasizing that too much. It's like, yeah, okay, whatever. Like, you know, it's one of those things. No, it's not one of those things. That was the main issue why we were having these trade issues, you know, trade, like these trade talks, trade wars, and everything. So, so now, like I said, now I'm trying to find like what's you know, what are the exact deals here? Yeah, now because like I said, now the focus seems to be on the EU because Trump is threatening tariffs of up to 50% on EU imports. So yeah, like I said, like it's really interesting. It's really messed up, and because somehow, like I said, we kind of overshadowed the fact that we reached the deal. That's a big thing. Come on, like that's a really big thing. But anyway, you know, I think it's politics as always. So unfortunately, that's what we are involved in here. Look, if they did reach a deal, That's fine, great, wonderful, applause. But I'm not gonna let it go, honestly. Like, why we're not really celebrating this that much? Because we were emphasizing the whole for years now. We have been looking at this China U.S. trade relationship. U.S. was imposing tariffs on China, and now it's like, we signed a deal. Okay, let's move on. No, it's like, come on, let's dig into this. Anyway, now of course the focus falls on Europe, right? I mean, and my question as well now, if there is some sort of a deal reached with Europe, then will it be also like, we signed a deal, let's move on? No, it's like, we're creating, like I said, such fireworks with when we're not reaching a deal, but we're not really like celebrating the fact that when we're reaching a deal. I don't know. Like, I mean, this is the crazy moment for me. Anyway, um, right. So now I think that because I think that what the U.S. administration is now trying to focus on is the kind of the bashing of Jerome Powell, basically on the fact that he's not lowering interest rates. I'll get to that point in a bit when I'll jump into the U.S. indices. But first, with China here, look, we're seeing a little bit of a decline. It's fine. It's all okay. In a way, initially I managed to reach my target. My target was this area. It came very close, but I'll still take it as a success because, as I said before, it's never the level. It's more the area around that level. So now, like I said, I'm watching this very carefully. If we do pop above the 13,800 zone, now that's from where I'm gonna keep an eye on this upside here scenario. I want to draw as well some upside lines, and again, they're both very tentative. This one here, the steeper upside line, which is drawn from the lowest point of April of 2025, and also the this other upside line right here, which is drawn from the low of the 30th of April. And this one is, like I said, this one is a flatter one, so maybe it could play out nicely as well, because again, what I'm looking at here is a possible ascending triangle formation. Now, I don't think that, like I said, this steeper upside line might hold, but like let's keep it for now here. But the other one, like I said, the flatter upside line could be an indication here that we are forming something of an ascending triangle. Such triangles tend to break to the upside, theoretically. However, we've seen this happening in the opposite direction, so that's why let's not get too positive yet. Like, let's wait for the confirmation first, and then we can go from there. I'll remove a few lines here. This is no longer needed. This is no longer. Yep, I'll move it here. So I'll keep this whole area just as a maneuverability area or maneuvering area, where the index could walk a little bit. So we'll allow it to walk freely in this area. And look, I'm keeping an eye on my EMAs as well, which if provide support, we could see a rebound here. So again, I'm still cautiously bullish on this one, but for me to get very bullish, I need to see a clearance of that 13,800 zone. US indices, let's jump into those. Dow Jones Industrial Average, fantastic performance yesterday, great stuff. What can I say? Everything is, everything is risk on. Everything is risk on. Everybody's enjoying the moment. This is what I was talking about on Wednesday in my MarketsTalk webinar, that we were around here somewhere, and I said that, look, to reach the all-time highs for Dow, we need to still make around 4%. So we're now we've already done a few percents here. Now we've already done 1%. So if we do a 1% every time, every trading session, then maybe, just maybe, we could see this one actually getting hit very quickly. But look. Also, I'll briefly mention, not briefly, but actually I'll mention the S&P 500 here. We hit the new all-time high. That's wonderful. That's great. This is what I kept on saying. This is what I'm like, if I said that if we clear, if we stay above the 5,822 territory, this could actually push this index a little bit higher. But if we clear the 6,069 area, this is kind of opening the door to the all-time high, and why not to reach that, right? So there we go. Boom. Fantastic. NASDAQ, the same story, all-time high. Now, look, I think the fact right now is like not what level but how this could play out. If I'm following my theory that I keep on presenting all the time, that whenever like from the top three US indices, whenever one index reaches an all-time high, then it's always either Dow or Nasdaq goes first, and then the S&P. Yeah, ish, most of the time, but okay, because the S&P is kind of somewhere in the middle all the time between the Dow and the Nasdaq. And only yesterday I can see that the numbers came. S&P was the lowest one, but this is one of those rare occasions. To be honest, it's like most of the time the S&P is somewhere in between. Anyway, what I want to say is that look, Nasdaq rallied, created a new all-time high. Fantastic move here. Cleared the all-time high, previous all-time high, and now is sitting above this 22,241. Now, what I said to you before, and what I'll say now again, that looking at the monthly chart, you can see that we are nicely conveniently sitting above this 22,241 zone on the cash index, on my cash index. And whenever we clear a new all-time the previous all-time high, then we really want to see if we are, let's say in this case, if the monthly candle, the body of the monthly candle will stay above the previous all-time high. So we have today still, and we also have Monday. Okay, something tells me that we could still stay above this one. I think that there is some positivity coming from the tariff talks, and I'll jump into that in a bit. But from the technical perspective, yes, if we do stay above the body, if the body of the daily candle stays above the previous all-time high, then yes, great, I will continue targeting the upside. If by any chance we see the body of this monthly candle on Monday closing below this barrier, below this 22,241 zone, well, that could be an indication of a possible reversal. And again, let's see how this will play out. But again, this is one of the theories. It doesn't always happen, but I just want to throw it out there, because I'm going to pick up on this on Monday, and we'll see. And we'll see what's going to happen there. But again, first we need to go through Friday, and then of course we also need to go through Monday's trading. But it will be quite interesting to see where we're going to close. Where we're going to close this week, because if we're looking at the weekly candle here, beautiful, right? Just no tails, no nothing, just like straight on like that. Yep, we're currently sitting above this, so let's keep an eye on this one today. Let's see what kind of action we're going to get. Are we going to further move higher, or is it just going to be like something of a bit of a retracement? Now look, with the trade talks, and this is what I was emphasizing a lot in my recent videos this week, we're getting closer to the 9th of July. And 9th of July basically is when the 90-day pause of the liberation tariffs that were announced in April, that's when we're getting the end of those, end of that pause. And what I'm seeing recently, from like what reports I'm seeing recently, is that maybe, just maybe, the deadline might be extended to some players, to some countries. Basically, if what they're saying is that if we're negotiating right now, if we're on the right path, but we're lacking a little bit of time, then hey, why not to why not to kind of negotiate that a little bit further, right? And why not to kind of maybe give a little bit more time to reach that deal? Look, my problem with this is that you had 90 days, honestly. Like, it should have been probably done like straight after when the pause was given. But nobody kind of cares. Everybody's distracted about other things. And honestly, June, of course, I understand, was a crazy month, but politically, geopolitically, yes. Still, you could have, you had 90 days. So that means that I think that nobody's bothered about that. I mean, everybody's just trying to create some sort of like instability or something like that, like this fear that oh, we need to do this. I think that, look, if they wanted, they could have done it, right? Somehow a deal with China like that, and they're quiet about it. Yeah, we're done, and then let's move on. No, let's let's anyway, so that's what I'm saying. So that's why everything is possible, and I don't know if they're gonna. If I think the focus right now is on the European Union, and I think that this is what the pressure, where the pressure is from the U.S., and they're trying to pressure the European Union. They're trying to reach. They're trying to reach that kind of deal. But I think that what they want is that so that the European Union would come over and start begging, like for favorable rates and stuff like that. Anyway, we'll see how that ends. Of course, at the moment everything is up in the air. But certainly, if we're struggling to reach something, maybe the U.S. indices could stall and they could like just maybe not move anywhere, just maybe like go flat. But the German DAX, now that's where the problem could arise. I mean, look, we saw a decline here on the German index after we reached an all-time high. Now we're seeing a retracement back up. So this Fibonacci, look, it worked out nicely. We reached the 23.6 after if we measure it from the lows of April, from when we got that big drop to the current all-time high. So we did the 23.6. That's wonderful, great. Let's redraw this. And what I want to redraw is here this way. This is what I'm looking at. So this decline, now we're retracing we retraced more than 50%. The 50% did provide fantastic resistance, and I think that we're on the right track towards the 61.8% here, which is roughly around the 23,927 zone, and a little bit above that we have other levels, but let's go slowly on this. Let's not rush into things. So yes, we're keeping a close eye on this. Of course, like I said, this is not really in favor of the US. Sorry, the US, EU. This whole kind of dragging moment, but I think that what's happening right now, I think that yes. The U.S. is trying to kind of, use their position and pressure the EU. I'm not saying that the EU is saint. No, I think nobody is in that in this deal. Nobody is. But in general, yes, I think maybe the EU kind of now needs to figure out what they're going to do. Otherwise, they're going to have to play the higher tariff game. Let's see. Let's see. Again, it's not, look, if they don't reach a deal, it's not super major critical, but it could have its effects on the auto industry. We could see, for example, producers like Mediterranean producers who are exporting, let's say, a lot of olive oil into the U.S. Those come, but then again. They will continue exporting. Like things like that are still in demand, and the price will rise. But the thing is that I think that the U.S. consumer, will be damaged as well. And it's not only the European producers that will be hurt. It's also the U.S. consumer who's consuming a lot of produce from Europe, especially like I said, food food and condiments and stuff like that. So, long story short, for now, we're carefully watching the situation. We're watching what's happening. Today. Today, mainly, I think the problem will be in the headlines is going to be the Jerome Powell removal. Which is it's apparently in the plans right now for Donald Trump, and we'll see how that plays out. Of course, looking at the U.S. dollar, and this is where it's quite relative here to this topic. So at the moment, the U.S. dollar is drifting lower, which is it can be played politically very well, because on one hand they can say you know, it's we're seeing this dollars because of the Fed and everything. However, it's not really because of the Fed. The Fed is actually sticking to not doing anything right now in terms of monitoring the situation with the trade talks and all. I think that the Fed was quite clear that if they see some sort of clarity from the trade talks, then they will maybe do something with the interest rates. However, at the moment, it seems like it's very, very quiet. There is criticism that the Fed is like maybe taking a little bit too long to decide, you know, because again, like, you know, to stay data dependent, well, how much longer you want to stay data dependent, you know, you are how much long you want to keep the rates unchanged. Again, I think that this is not the question is like, you know, because there's pressure from the White House, and that's why everybody's asking this question. In general, you can keep the rates flat for a long period of time. You don't need to kind of, you know, force them to jump around. On the contrary, in a way, when the Fed keeps the rates unchanged and the economic numbers are not that bad, they're, you know, then I don't see like the point why you need to kind of, you know, shift them around too much. Anyway, but this is not what the, you know, the White House administration wants, and that's why we're seeing some, you know, some problems right now where the Federal Reserve Chief Jerome Powell is kind of, you know, getting the heat and could be potentially replaced. Well, and that's gonna probably come maybe like September time, as I understood, or October, September, something like that. But we'll see, of course, if that's going to be. If now the thing is that everybody's questioning what's going to happen in July. Are we going to see a drop of rates? Because at the moment we're only pricing in a 20% probability for a cut. Still, the almost 80% is on the no cut, and so going into September, we are pricing in a cut here, a cut here of 25 basis points, and October we're expecting another cut, and December, as I understood, a third cut. Now this is, the tides have shifted a little bit, which is quite interesting, and that's why for now I am being very careful here with the US dollar. In general, I think that the US dollar is drifting lower on that news, on that speculation that we could see further, you know, cuts, which is not very good for the US dollar. It's good for the U.S. economy in a way, because at the moment, not maybe the economy, but more for the U.S. politics, because for the current ruling party, the current ruling administration, because if the agenda is to push the so-called Made in USA label, then yes, you need a weaker dollar. You need to make your goods more attractive on the global arena, and a weaker dollar against those other major currencies like euro and pound, you know, Japanese yen. So when it weakens, then yes, then it's more expensive for the U.S. importers to import, but it's cheaper for the U.S. exporters, and they make the U.S. exports more attractive. So there we go. You know, it's kind of a win right now. If you're going to cut rates further, you're going to drop that dollar even further. So is the idea to drop it all the way to the 90s? Well, it could be quite interesting, to be honest. It could be quite an interesting logic here, and hey, I'm not going to say anything yet, but for now, everything is moving very nicely to the downside, and then we'll go from there. Of course, for now, everything is, like I said, I've talked about this 97.28 zone. I said that if we do clear it, I will go further south. There we go. So far, so good. The German index, I already talked about it, and the the FTSE 100. Look there, it's holding on. It's holding on above the 50-day EMA. We are above the 8,811 territory. So if we do push back above this territory, then yes, great, I'll go to the upside and I'll target the 8,910 area, and then we'll take it from there. Let's jump into the Forex world, ladies and gentlemen. AUDUSD, boom, there we go. Beautiful movement to the upside here. Of course, the weaker dollar is supporting this movement, and so far so good. Look, I talked about this potential idea of it's not a rising channel, it's more of a veg here, and so far, yes, we are pushing nicely to the upside. Again, according to all the TA rules, rising wedges tend to break to the downside. However, we'll look at this prevailing trend. Prevailing trend was to the upside, so there is a chance for this one to actually to push higher further. So again, for now I'm aiming for the upper side of this this rising wedge. It roughly could be somewhere maybe around the 0.60, closer to the 0.66 territory, a little bit below that, and then we'll go from there. Now AUDJPY, now this one I really want to talk about because this is one of those pairs which is a risk on, risk off monitor, and it measures how we're performing, how the stock market is performing, how it looks, and for now it's I would say everything is looking quite positive, right? Well, my problem here, and I'll tell you what I mean. My problem here is that the stock market is rallying. It's rallying. Some of the US indices are reaching all-time highs. Great. But AUDJPY should be rallying as well. It's basically our, like I said, risk on, risk off monitor. And what we're only seeing right now is, yes, we're forming something of like slightly higher lows, but we are struggling with the barrier. We're struggling with that 94.75 zone-ish, or actually maybe even a little bit higher here, I would say. We're struggling with this 94.83, 85 area. And I need a clearance of that. And for now, it seems like we're forming something of a maybe possible triangle pattern, something like this. Look, yes, if we do pop above the 94.83, I'll go higher, but I would prefer a push above the 200-day EMA first in order to get comfortable with higher levels, because we also have to not exclude this 95.74 territory, which is a little bit in the way, and that could be a little bit of a problem here. But look, if we overcome it, wonderful. Let's go further north. That's, like I said, that's why my issue is that everything seems to be okay, but the AUDJPY is not moving higher. Look, I'm not. I'll get to Japanese yen in a moment with the US dollar, but Still, I would prefer to see this one actually, a little bit on this more stronger side than the weaker one. NZD USD, just a quick update. So yes, pushing higher, so approaching my barrier, my point of breakout, the 0.6087. Let's see what's going to happen there. NZDJPY, similar story. Look at this. I mean, yeah. I mean, also, like, and look at this. It is pushing higher. It's forming something of a nice ascending triangle pattern, but it is, yeah, it is a little bit on the weaker side, I would say. So, yes, I need that clearance. I need that clearance above this 87 point kind of 72 something zone here, 90 area approximately around there. If we can get that nice clearance, amazing, wonderful. I will go to the upside. There we go. And then I'll target maybe something around here, maybe closer to the 90s, but something like that. Let's jump into USDJPY. There we go. So USDJPY is drifting lower. So we're seeing a little bit of yen strengthening. However, I think that it's more of a dollar weakness rather than yen strengthening, because yen should not be strengthening too much because of the because, like I said, we're currently in risk on environment. However, maybe the market, maybe somewhere in the background, the market sees problems with the economy in general, because again, there's still instability. There are still issues in the Middle East. There are issues with the Federal Reserve chief, or as White House would like to believe it. Yeah. For now, it's still drifting lower. So I said to you before that from the technical perspective, if we do drop below this upside line, then yes, I'm going to lean a little bit more towards the downside. So far, we're on the right track. USDCAD, let's have a look at this one. This one is a mess, to be honest. I mean, first of all, I think I need to get rid of this upside line. No longer needed. It got violated a few times, so that's it. Now what I'm looking at, actually, I'm sticking to this 1.3634 zone right here. And if it provides good support, then maybe I'll see this scenario playing out where we could eventually go and test that downside line. But for this, what I would need to see here is a little bit of a stronger oil, in my opinion. Look, if we do fall below the 1.3634, I will consider a move to the downside. USDCHF, beautiful drop below the 0.8038. Amazing. This is working quite well for the bears here. And look, eventually this will have to go higher, but I'm not really getting way too excited right now because again, it is. I think it's really, yes, I think there's more downside for the US dollar. Very quickly on EURUSD. So far so good. We reached, look at this beautiful move here. We reached the upper side of this rising channel that I kept on talking about. Boom, fantastic. So what's next? Next is basically maybe a little bit of a retracement here could be possible. Again, like I said, I'm loving this rising channel. It's a good one here. So far so good. But if we clear the upper side here of this rising channel, now this is where we need to go back into history. And for this, I will jump into a monthly chart. To be honest, I want to pick up on this key area of resistance right here, the 1.19, a little bit maybe above that. So 1.19 becomes actually quite a strong area of resistance. It held the pair back here in July, August, and October 2021. So we're approaching this area, and I think that maybe history could repeat itself. So let's say, imagine this. We could see July monthly candle running all the way to 1.19, stalling here somewhere, and just kind of, and then maybe we could repeat the history, and then we could reverse back down. But at the moment, look at this. In general, look at these monthly candles from 1.01 since January. We only have been rallying here on the EURUSD, and look at this. This is spectacular. I mean, I think once we get the rate cut from the Fed, then we could. Sorry, not the other way around. Sorry, not once we get the Fed the rate cut. This could explode even further. Maybe it could actually travel all the way towards the 1.22s, 1.23s. Somewhere around there. No. But if we still see the Fed, for example, actually not going for a rate cut, on the contrary, just kind of fighting the White House, then like I said, then maybe we could see the US dollar strengthening a little bit. Maybe we could see a little bit of a reversal. So just keep that in mind. Like I said, we're at a very interesting spot right now. Can we go like this to the downside all the way to the to the upside throughout the whole 2025? Yes, we can. Yes, we can. And those short sellers right now are probably getting squished. And I really feel sorry for you guys, because if you're still trying to short sell this one, this is a little bit of an issue, because look, I mean, back in 2022, so 2022 we started declining, we started weakening, and it was just for the whole year almost, apart from here we recovered at the end of the year, but if we measure from summer to summer, then of 2021 to 2022, then yes, we'll see that we were just moving to the downside. Anyway, we're measuring the year, and here, like I said, the issue is that I'm trying to figure out where the next potential reversal could be, and at the moment, with the situation with what we're seeing right now in the U.S. politics, in the U.S. With the U.S. Federal Reserve, I don't really see the dollar kind of strengthening that much, unless there is a political conflict again where the US dollar will take the role of a safe haven and will shoot up. So yeah, that's what we're seeing right now. So that's why maybe where we got the the ceasefire, agreement, because well, the US dollar was picking up interest, and it's no good for the US exports. EUROJPY, beautiful move. So yeah, this is what I was saying. I mean, the Japanese yen is not really that strong. It's more of a, like I said, weakness of the US dollar in that USDJPY pair. Here you can see clearly EUROJPY continues to rally. At some point it will reverse back down, but at the moment I'm just targeting this 170 psychological 170 zone, and then I'll go from there. GBPUSD, very quickly, beautiful move as well, similar to EURUSD. Basically, weakness of the US dollar is driving this one further north. The question is where we're gonna find good resistance next. Well, there are a bunch of levels, to be honest, and I think that maybe we need to be very careful. Maybe this could be a nice good target at 1.3833, but at the same time, maybe this could be a nice good target around the 1.3983. In general, I would say this way: I'm going to target the psychological 1.40 zone, and I will also aim for this 1.4242 area, which is basically near the highs of near the highest point of February of 2021 and near the highest point of June of 2021, basically near the highest point of 2021. So I like that area, but first I think that what's on the agenda, I think the psychological 1.40 zone. Just very quickly on the CAD JPY, I just want to have a quick look. We're still above the subside line, so it's still somewhat positive. CHFJPY, beautiful movement here. So yes, we've cleared the this previous all-time high, and we're now sitting above this area. And for this one, very quickly, CHFJPY, let me just grab the trading views chart, which has a little bit more history here. I want to look at the monthly, and look at this. I mean, this is a historic moment that we're living through, and what I'm curious to see right now is what's going to happen with this barrier here, this previous all-time high. We're clearing it, we cleared it, but are we going to see the body of this daily candle staying above this area? If we're going to stay, I think that yes, the levels that we're in uncharted territory, basically, for CHFJPY. We're in uncharted territory, and yeah, well, I think that yes, I think that it's going to be quite an interesting thing here. Anyway, jumping into gold, let's jump into our commodities and look at this. While I am on the monthly chart, look at this. I mean, sorry for the squeeze here, but it is shifting to the downside. The candle has changed, and look how well this 3,430.40 zone is providing resistance. Ladies and gentlemen, this highlighted zone, we did clear it for a little bit, but look, I have this at 3,430, kind of something like that ish zone. In general, you can do whatever. If you feel comfortable more with the 3,450, be my guest, honestly, but I would say my area is in between the 3,430.40 level in there. And we tested that area. We're now drifting back down, and most importantly, we're clearing this upside line taken from the low of the 7th of April. I talked about this in the beginning of this week. I said, look, maybe we're forming a nice little ascending triangle pattern, but if we break this lower side of that ascending triangle pattern and we fall below the 50-day EMA, ladies and gentlemen, I am leaning towards the downside. I'm leaning towards the 3,100 kind of in 69 zone, somewhere around here, where my 100-day EMA is, and where my this lower side of a potential range is. And this is the one right there. Again, it's we could still see this one as a false breakout, don't get me wrong. We could see a push back up today, but yep, for now, like I said, it's looking a little bit more bearish than bullish. Silver is also drifting a little bit lower, but it's still holding on better than gold. So look, I think I've reached my point where I'm just going to take a very conservative approach here. If we do push above the 37.30 zone, I'll go higher. For the downside, 35.45 zone. If we drop below that, I'll go a little bit lower. Palladium, very quickly. Ooh, nice spike here. Look at this. Boom. Like, I mean, Palladium. Wow, this is picking up interest. Okay. Interesting. If you were holding Palladium from like around, 1,000, you bought it at around 1,000, congratulations, you're already doing quite well. You're already doing at least around 14%, so well done. Of course, then my next target technically is this one, the 1,252, but let's see. Let's see if we can reach that. But I think maybe actually this whole zone we should keep an eye on. There we go. This whole territory around the 1,250, just in general. I think the psychological 1,250 could be a better option. By the way, ladies and gentlemen, whoever's watching right now, if you have any questions, feel free to ask. Honestly, throw it out there. I'm talking a lot, and but if you do have any questions, feel free. If I know the answer, I'll tell you I know the answer. But if I don't know the answer, I'll tell you that I don't know the answer. Anyway, Platinum. But yeah, feel free to ask questions. Platinum, look at this animal. Boom. Honestly, like, wow, this is spectacular. We're gaining not a full 40% already if you bought it at around 1,000 here. I mean, we have been flat for a while, and look at this move. Wow, this is spectacular. What can I say? What can I say? It's an interesting moment that we're living through. Look, I think, is it going to continue going further north? My question is, what's going to happen with this little hurdle here? Yep. Let's see what's going to happen with this hurdle. There we go. This 1,350 territory. If we do somehow fall back below it, I'm considering a little bit of a retracement back down. Copper is also pushing higher. It's loving the fact that there was a deal reached between US and China, apparently, and that's why we are seeing copper exploding, because again, it kind of means that we're back to production. We could see increased production levels in China, kind of, and they use a lot of copper in their technology. So hey, so everything seems to be logical so far. But one thing for sure, what I was saying is that the barrier here, that 4.96 and the psychological 5 level, I was looking for those. We cleared those. Amazing. Let's go further up. Oil, my beloved oil, or our beloved oil. Look at this. I mean, look at the roller coaster we had in June, ladies and gentlemen. First, we get the first rockets launched by Israel at Iran on the 12th of June, late 12th of June. Then Iran retaliates, then the whole escalation goes forward. The crude oil jumps heavily here, and then yes, and this is where it stalls near this downside line. And also, let me just I have it on another chart. Why I didn't draw it on this one? But I have it on another chart. Basically, this downside line. Again, both of these downside lines are tentative. They're tentative because maybe this should have been drawn this way, or maybe if we're capturing this, then it's like I said, it's a little bit of a tricky moment. Maybe it's actually drawn, should be drawn this way right here. So yep, let me just see if this is gonna make sense. Ish. It's like I said, it's still, everything is very tentative. So we did overshoot it, but most importantly, we drifted back down. We actually, let's have a look what happened here. We wiped out these gains here, and this is a monthly chart, and I'm loving this chart because I think it's giving us a little bit of a better indication. Look, I said to you in my previous webinars that I'm keeping an eye on that $65 mark. I think, to me, that $65 mark, this one right here, where we're currently getting a hold up, is quite important. Not only that it was acting as a good area of resistance, but previously it acted as a good area of support as well. So it's not specifically the level, it's more of like an area around that level, and that's why. But the 65 is just like kind of, I would say, maybe median. And if we do drop and we do stay below the $65 mark by the end of this month, I mean today or on Monday, now that's where the interesting bit comes in, and this is where it kind of supports my theory of still staying bearish on oil. And I said that from the beginning, unless there's a conflict which could drive the price higher, there we go. But overall, we have an oversupply in the world. The demand has being kind of subdued a little bit, but supply is increasing. We have OPEC plus countries which would keep on pumping, and that's where the issue arises. That's why I don't see oil prices as the let's say the ones that could go right now anytime soon to the upside. I'll be wrong if we start clearing the 77 territory here, 77 and a half zone. If we clear that, then yeah, I'll go higher. But at the moment, I'm leaning towards the downside. Natural gas. Natural gas is in an interesting spot here. Yes, it also drifted back down, back below this 3.83 territory. Boom, fantastic. We moved higher. We found resistance near the 4.15 zone, and we reversed back down. At the moment, I'm a little bit bearish, especially if we test this upside line taken from the lowest point of April here. Or especially, I would say it this way, if we remain below the 50 and the 100 day EMA, then I'm bearish. And then, like I said, my target will be the upside line. But of course, we'll have to clear the 200 day EMA, which provided recently good support. But yeah, it could be a possibility here. Quick glance on coffee. This one is drifting lower, further south. Cocoa, yes, a nice rebound here, pushing back up. Oh, with cocoa, actually, let me see if this is a veg or is this a falling channel. More of a falling channel, actually. Okay, that's interesting. So yes. Let me just actually, if that's the case, then if this is a falling channel, then I will draw it this way. There we go. Yep, I will draw it this way. So I think that makes sense. So look, the prevailing trend was to the upside, so a greater chance for this one is to break out higher. Let's see if that's going to be the case. But either way, I would need to see a clearance of the upper side of this falling channel. If we clear the upper side, if we clear the EMAs, then yes, great, I'll go to the upside. Quick glance on wheat here. Yeah, what can I say? I mean, it's a little bit on the lower side. Sugar. Oh, nice. Look at this. Finally, this is what I'm talking about. This is what I like. Why I look at these falling channels and everything, because there we go, a clear example. Pushed through the upper side, great, a little bit of retracement, retested the upper side of the falling channel. So now it is looking quite positive, to be honest. Let's see if we can actually make a move higher. Cotton, oh, nice. Look at this. Cotton is beautifully moving to the upside. Wow, this is just spectacular. So, and most importantly, we jumped and we stayed above the 200-day EMA. Wow, that is great. This is the white line, by the way. Wow, this is great, amazing. So 69 level, if we can clear that one, I think this is opening the door to some higher areas. And finally, ladies and gentlemen, very quickly for dessert, Bitcoin, moved higher. We're very close to this downside line. I'm still aiming for that one. And hey, if we do clear, but probably, to be honest, and deep in my heart and deep in my soul, I'm just actually waiting for a clearance of this downside line, and then I'm going to be a little bit more positive here. Yes, great, but I need that clearance here. Bitcoin Cash, ooh, very nice. 400. This is a 500 level. The psychological 500 is currently a fantastic barrier. This worked out. This curve moved to the upside worked out. Now the question is, can the 500 barrier get violated so that we could see, a move towards the 563 zone here somewhere, or maybe even higher. Ethereum is a little bit more on the calm side, but it's below the 200-day EMA, but basically it's oscillating around the EMAs. This upside line, I think, no longer needed. It got violated, so now we're focusing just on the range here, which got violated as well, one of the sides here. But I think if you look at the weekly, I know, actually, no, I'm sorry, I'm taking my words back. No, it's a mess. It's a mess. So, look, but I'll still keep an eye on this hurdle, to be honest. I mean, yeah, mess or no mess, I'm still going to keep an eye on this hurdle. If we do continue to trade above that, I will kind of lean to a little bit more towards the upside, but I'll get a little bit more comfortable if we do push it back above the 200-day EMA. Ripple is drifting back down. But this formation right here, when we have a big candle like this to the upside, and then the consequent 3 candles, bearish candles, which bodies are within their bodies, the total size is the same size as the first candle. So the second, third, and fourth candle is their bodies are within the first body. The fifth body tends to be to the upside. Again, is that going to be true? We'll have to just wait and see. For now, we're not in a rush. Maybe this is something else, but of course, keeping a very close eye on this 2.0506 area. If we stay above that, I'm going to continue targeting the upside. So basically, I'm going to do something like this. Yes, it's going to be quite an interesting spot, you know, if we hold above this area. If we do start dropping below the 200-day EMA, I'm leaning towards the downside. Litecoin, somewhat positive, but it's waiting for some sort of a catalyst here or something like that. But look, as long as we stay above the 81 mark here, if we do stay above that, I'm still continuing to the upside. Dogecoin, it pushed back above this upside line, although it got violated, but I'm still going to keep that on the chart for now. As long as we stay above this upside line, I'm going to maybe consider a little bit of a move here to the upside within this formation, within this squeeze. Polkadot is an interesting one here as well. Look at this. I mean, the question is, are we going to stay above this 3.22 zone, or actually are we going to kind of what's the word, break lower and then drag further south? Well, again, this is another question. I'm not really in a rush right now, but it looks quite interesting technically, but from the technical side, yes. But again, I need that rebound from this territory. I want to see what's going to happen with this hurdle. And finally, Tron. Tron is also looking quite positive, to be honest. This little formation, this whole kind of reversal, sharp reversal, this looks like a bullish flag right now. But again, we're keeping an eye on this 50-day EMA here shown as the green line. If we do stay above that, then maybe, like I said, if we do stay somewhere around here, if we do push back up, maybe we could gain. I'm aiming for the 0.2786 territory. That's not a full 4%, still okay. But yeah, it could be quite an interesting spot here for Tron. But again, let's see if we hold above that 50-day EMA. Ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much, everybody, for watching and listening. I really appreciate that. And look, I tried to deliver a lot of information. Hopefully you found it useful. And yep, I hope you'll have a wonderful, wonderful weekend, ladies and gentlemen. First of all, of course, I hope you'll have a wonderful Friday today. And I keep on saying sometimes that, look, if you already did quite good through this whole week, just don't mess it up. I mean, sometimes we get this like one way action Friday, basically where we're in one-way street, everything is moving in one direction. If you are, let's say, counter trend trading, then yes, this could, it could backfire. So that's why, it's better just to maybe not to enter at all on Fridays if you already did a good, job throughout the whole week. But if you really want to enter, because we have the PCEs today, which are expected to come out a little bit on the higher side. So look, the PCEs, by the way, just to kind of let you know that this is something that the whole market is watching today, and the PCE is expected to come out a little bit on the higher side. The year-on-year figure, the core as well, on the higher side. So the month-on-month are expected to remain the same, both of those, but yes, the market will be carefully monitoring that. So if you really want to trade that, then just, maybe you can use the smallest position ever. But again, I strongly recommend not to do anything if you don't feel comfortable, and if you just want to enter a trade just for the sake of it, no, just don't do it. Unless you really know what you're doing and you're really comfortable with what you're doing. So only then. But if you're not, if there's a little bit, at least one element of the doubt, if there's at least one little box that is not ticked, no, don't enter. Ladies and gentlemen, thank you very much. Have a beautiful trading day today. Have a beautiful weekend. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I'll see you on Monday. Bye-bye.